All right, welcome back to our earnings editions. This is Sean Emory from Avory Company, co-founder there. We're an investment shop that runs a high conviction equity strategy. Our concept is investing where the world is headed. What we wanted to do today, we just covered Tesla, but we wanted to cover Alphabet as well. I think it's such an important company, to follow, track, and all the nuances there. Now, the quarter in general, I'll do a couple different things. Number one is the state of the quarter. Number two, the state of AI, and number three, really just summing it up and giving our generalized takeaway. Number one, the state of the quarter was really around the cloud business, in addition to just overall business in general. So revenue at the high end, was $84 billion. That was a beat by half of or $500 million. That was 14% growth. Now, that was followed with margins, operating margins, that is, of around 32%, which is 3 percentage points of growth year over year. So again, you're seeing a business that's growing double digits, operating margins expanding. A lot of that operating margin expansion comes through the business of their Google Cloud, which just surpassed $10 billion in a single quarter. So while they're number three behind Microsoft Azure and Amazon AWS, they're proving out that this is, third in line, but still a very successful business. The part of that business that also drove, operating margin performance was Google Cloud again, which was came out with $1 billion of quarterly, operating profit. Again, I'm doing these stuff, at the top of my brain, and after analyzing the report, but a $10 billion business on a quarterly basis with $1 billion operating profit business. Again, that has led to a pretty dramatic inflection point for the profitability of that business, while at the same time, they're going against fierce competition. So I think it says a lot. Now, the one knock on the quarter, I think there's a knock, and then some other, I guess, conversations around CapEx. But I'll start with YouTube. YouTube was actually weaker than expected, but still grew, low double digits. So still a strong quarter in an absolute sense, but on a relative basis to what the street was, I guess, forecasting, it missed by a couple $100 million. So seeing YouTube miss, but also seeing some of their other ad products do well, I think it says a lot about actually the health of the ad ecosystem more broadly. Now, this isn't any weakness in YouTube, is much more, brand marketing spend. So that should, be a reflection on companies like Snap or Pinterest, as opposed to performance marketing, which is much more what Meta and some of the others are focused on. So again, YouTube, Google Cloud, the core overall business continues to perform well. If you recall, we're obviously roughly almost like a year and a half, 2 years post kind of that initial ChatGPT launch, of which the narrative in the marketplace was that this was going to eat into Google Search's business, and that just simply isn't showing up. If anything, it's feeding into Google Cloud business, which on the earnings call, and that's the second part of this, is really around their AI story, is really the 1.2 million developers developing on their platforms. They finally, picked a name from Bard to Gemini. Gemini has, I think 3 or 4 different models of different sizes. So they're trying to be very, very specific in terms of, how they're delivering these solutions to not only consumers with kind of their generative search functionality. So if you now go into something like Google and you make a question or, write something in the search bar, you will get a version, a different version of a generative search, and also, what we traditionally know as, search. So that generative side is you get these little drop-down menus that come out, and a lot of that is generatively, created using their Gemini background and models to help answer many of these questions in a much more natural language way. I think actually that model, that combination of the two is pretty powerful. This is just myself, but I tend to still use Google Search in a very similar way to I did in the past, while at the same time appreciating the experience of some of these other, number one, generative search for Google, but also some of the other platforms out there, whether it's the Meta AI stuff where they just launched a pretty large parameter model and new capabilities across it, but also obviously some of the more commercial ones with ChatGPT, Claude from Anthropic, and then there's a good swath of others. Now, the second part, or some of the other issues as it relates to the market's perception, is really around the questions is AI generating profits or additional revenue for someone like Google, and if so, what does that mean for revenue, but also for CapEx? And clearly, in the quarter, they highlighted CapEx to be somewhere around 13 billion. The market was thinking around 12 or 11. And it seemingly looks like, CapEx will continue to ramp as they need to spend for the compute resources required for some of this AI stuff. Now, remember, they have TPUs, which is different from GPUs, and not to get into that today, but it's really around they're building their own capabilities internally and going much more vertical, while also exposing through their cloud business some of the other players out there and their compute resources. So developers, engineers, companies can choose how they want to run their workloads or models within Gemini or Google Cloud. So I think CapEx is growing, and that's number one. Number two is that again, is there revenue really coming out of this? So some would say we're still early in this journey of Gen AI and what it could do to Google Workplace or Gmail or to some of their other services within YouTube. But Google has mentioned, they mentioned on the earnings call, that Gemini is across pretty much 6 of their main applications or ecosystems. And from a user standpoint, someone that uses Google products, whether it's YouTube or some of the other stuff, I mean, it's a notch above what I think the experience was in prior years without it. But at the same time, is this massive unlock? We're believers at Avory that AI is a massive unlock eventually, and some of it will be infrastructure related, and the experiences we get will be enhanced, but we won't necessarily be the ones dealing with the tools. So personalization will be more personalized, for lack of a better way of saying it. And some of our day to day, whether it's with AI agents, email functionality and summarization, those little things I think add up to a lot. So that's kind of our point of view. But again, Google actually had a good quarter. So that's kind of my summary here is Google had a really good quarter, performed well, top and bottom line. They're showing growth and profitability, which is what everyone wants. Just remember, the shares did run up into kind of this earnings print. So I think a lot of that is reflective in potentially, midday today of what's happening in the shares. But, I think they're nailing cloud. This was once a growing business, but it wasn't showing any profits. So it's still growing and showing profits. I think they're going to be viewed as one of the leaders as it relates to AI and AI infrastructure, which should support the cloud business, even if it doesn't incredibly drive revenues on the consumer side. And that's kind of the takeaway. YouTube is exactly what it is. They said whether it's streaming or not streaming, it's the most engaged, most watched platform in the world of all the media outlets other than Disney. So that just says the breadth and scale of YouTube more broadly. So with that, more earnings, summarizations coming up in the future. So stay tuned, follow, and we'll be back with you when more companies report. Have a